Welcome back to Market on Close. Let's get more reaction to earnings from Amazon. Welcome in Ivan Feinseth, the senior partner and chief investment officer, also the director of research at Tigris Financial Partners. Now, we appreciate you being with us. Initial response to Amazon's earnings. They beat on top and bottom line, but the market doesn't love it.
Well, I think Microsoft did set a high bar yesterday, but I still think the results are good. I mean, we're seeing good. The consumer remains strong, and the key is their advertising business and their ability to leverage AI to drive their advertising business. And they continue to do that successfully, and that will drive more consumers purchasing, more sellers coming onto the platform, and then drive more people coming onto their cloud platform as well.
I think there were some big expectations, all eyes on AWS, of course, and the revenue. It mostly was in line, just ahead of analysts' expectations. Thoughts on that, and is that enough? We've seen how punishing this earnings season can be.
Well, Amazon is a whole lot. AWS has been viewed as a key growth driver for a while, but it's a lot more things than just AWS. And maybe this quarter for cloud was definitely Microsoft's quarter. And the big users of data centers and hyperscale platforms use multiple ones. They don't just restrict to one because they have to have backup and they have to have redundancy. So we could see that shift next quarter. But I still say it's overall about the growth of revenue. Amazon had they exceeded expectations of their Prime days this summer. The estimate was going to be a strong $21 billion. It came in at 24. There were even people calling for missing that number. So the consumer remains strong. Amazon continues to increase their fulfillment and delivery capabilities, moving more and more to same day and expanding that to more areas, which is definitely a big selling point when consumers are looking at something online and they see if you click now, you can have it today or tomorrow. That's a powerful driver. And also the other factors like their satellite infrastructure and still expanding the cloud business. And of course, the delivery service. Those are multiple drivers. So Amazon is a whole lot more than just AWS. And unfortunately, the street sometimes gets caught up in just that.
Well, one thing I'm sort of, as I'm reading through the report, sort of keying in on something else the street may be caught up on, is their projected operating income for the current quarter did miss expectations. It came in that operating profit will be $15.5 billion to $20.5 billion in this period ending September, where they were expecting $19.4 billion. So still within range, but on the lower side, sales will be in the $174 billion to $179 billion range. And that's above. It was expected to be 173.2. Do you think there's any worry there that they're spending too much to try to keep up in the AI race?
Well, we saw from Microsoft, and we saw definitely from Meta Platforms, it's their spending on AI and data center infrastructure that is driving the growth. And I think that's the same case here. And Amazon has always been a net investment story. They don't focus on profit. They focus on revenue growth. And they drive that growth through ongoing investments. So it's never really been bad if Amazon has either guide lower or missed on operating income or net income. And as long as they continue to grow that top line, which they do continue to do that very well, I think that is still the driver.
So when the call happens, what do you think some of the most important questions are going to be for Amazon?
It'll be on capital investment in AI. And it'll be on costs. And of course, there'll probably be questions on why the guide lower on operating income. But I still think that the story is still intact and there's further upside. And maybe a little bit of the weakness is the weakness we saw. The market started off strong, driven by the results from Amazon, from Microsoft and from Meta, and then faded into the end of the day because we are at the end of the month. And so I'm not surprised that the reaction in Amazon is a little bit muted.
And we are seeing this muted downside reaction, but as we've certainly seen this earnings season, it doesn't always carry over into trading the next day. Do you expect to continue to see this muted reaction potentially to the downside, or as the street has more time to digest, do you expect things to turn more positive? Because like you're saying, Amazon's always been a long play, and if they consistently deliver.
Well, we have had a significant run-up, and the market has overcome a lot of obstacles and a lot of naysayers, including what would have been the negative impact of tariffs to the economy. That didn't happen. The negative impact of tariffs to the stock market, that hasn't happened. The impact of tariffs on inflation, that hasn't happened. So, and the stocks have risen tremendously in a really significant environment of pessimism. So I think that will continue, but the market is extended. It has had a great run. I mean, we saw an incredible recovery from the sell-off that we saw at the beginning of April that brought the S&P down to just over 4,800 to the rally where it is now over 6,400. So I do think the market has more to run. My year-end S&P price target is 6,700. So I think there is more to go.
Well, Ivan, we appreciate you being with us to help break down Amazon's earnings. That's Ivan Feinseth from Tigers Financial Partners.